Alright guys, welcome to the video. My name is K2 and here are my returns in the past, just the past month guys, and I'm here to teach you about the 9 estimated moving average. Alright guys, let's get it. So, alright, so first we're going to go ahead and open trading view. Alright, so currently we have, you go ahead and go over here and you can add it in the indicators. You just look up 9 EMA, and then it should be moving average, exponential moving average, 9, length 9. So yeah, and then I like to use this on the 5-minute chart. So let's go ahead and take a little look at this. So this is how I trade with the 9 EMA. Okay, we can see that this made a big blah 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 down, and then it goes up through the 9 EMA, and then look, and then it respects the 9 EMA, goes crazy, and then, okay, I'll probably see this happening. I'm like, oh shit, I could be getting out soon, but I wait for the 5-minute candle to close below the 9 EMA, and that's what tells me if it's a bad trade, if I should sell my trade. So just like look at the tight stop loss in this situation. If I'm gonna get into an continuation pattern where there's like a bunch of green candles and I'm looking for more green candles after that, then I'll probably get in here at like 256 right here. But then, oh shoot, it goes all the way up to 3. Guys, that's a crazy fucking return. And then we go over here, and then we're probably up, like our contracts are probably up like 120% because I trade options. And then we go over here. Okay, it's not respecting the 9 EMA. And then here's what I do. So look, it didn't close below the 9 EMA. And then it was a big red candle. So I'm still holding. Goes over here. It closes below the 9 EMA. But here's my rule of thumb. I look for right as it closes below the 9 EMA. And then if the next one is not instantly green, then I'm out. So if it like 4 ticks or something, I'll probably be out just like right here, guys. All right. So yeah, that's how I trade. All right, let's go ahead and look at another example. Let's go ahead and look for another good example. So I usually buy breakouts. So I'm usually waiting for the stock to have like a big green move at the start of the day. And then that's what indicates if I want to buy this stock or not. So let's go ahead and look at PLTR. Here we go. Here's a great example, guys. So this was from the other day, and yeah, so we got a big bullish candle right here, and I probably would have entered here because this is like a resistance level, whatever. And then so it's breaking out of resistance level. I get in, and the 9 EMA is telling me if I want to sell or not. So I get in, probably like right here, and then I'm selling most. These contracts are probably up 30% already, so I already sold like maybe 70% of my ownership of these contracts already. So, and then we see it does a sharp pullback, but look at this. It closes below the 9 EMA, but then look at this. The next candle is green, all right? So it closes below, but look, this is why you got to watch out, because like it might close below and you're just selling for a fat loss. And a lot of people, like, they'll see this fat candle, like look at this 156, and then it like huge down, freaking Vania Drake candle goes all the way down and goes all the way down to here, guys. And I'm sure a bunch of you are going to panic sell here, but if you panic sell here, you're cooked. Okay, this is why you got to look at the technical analysis of the graph. Okay, you got to wait for the 5-minute candle to close. Okay, and that'll tell you, it'll indicate if you want to sell or not. So this closed below. I know some of you are going to sell here, but me personally, I wouldn't sell here. I'm waiting for the next candle, and we saw maybe 2 ticks down. I'm waiting for about 4 ticks down, and I probably would have sold. If this candle right here would have went 4 ticks down, I would have been out. Okay, I probably would have sold most of my contracts up here for a 30% gain. And then down here, my 30% of the contract, so I probably would have been just above break even here if I sold right here. So that, like, small wins add up, guys. But look, and then it's like a huge candle, and then watch this. Usually what will happen in these stocks after a big breakout is they'll go up, and then it'll go touch the 9 EMA. And then this is good entry. Sometimes I enter on these a lot, especially like options. So like it'll be a big bullish to the upside. Like the contracts will go up from 20% to like or 20 cents to like 40 cents. And then if it makes like literally just like a half a dollar move because of like the volume and the panic sellers, these contracts will go back down to 20 cents. And then I'll re enter right here. And then boom, it comes back up to 40 cents. Boom, 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 a fucking dollar. You know what I mean? If you're trading zero DTEs. So it touched the 9 EMA. And this is why you got to look at the 9 EMA on the 5-minute chart, guys. So it's going to help you stop panic selling. All right? Because you got to look at these candles and you got to look for two candles. So one closes below and the next one start having bullish momentum down or bearish momentum down after closing a 9 EMA. So look, it respects the 9 EMA, respects the 9 EMA. And then, all right, we're consolidating. I usually start scaling out even more if I see consolidation because that consolidation equals people taking profit. So either they could take profit in this consolidation zone and then it could keep going up, or it could take profit in this consolidation zone and then go right back down. And then as we see right here, it goes to 9 EMA, slices right through it, closed below 4 ticks. All my runners would have been sold right here, guys. I don't care if it goes back up. I literally don't care because I've seen 80% of the time after it closed below the 9 EMA, it just like goes down. Like the bullish momentum is gone, guys. You want to get out. All right, so that was another example, PLTR. All right, guys, let's look at a great example. Literally SPY. All right, so the first candle, guys, you know if you copy my trades that usually I'm in these trades in the first 10 minutes of the market open. So it breaks above a resistance level, I get in. And then the good thing about trading breakouts is you get into these options and other people see that this is going up like crazy. So they get into either getting into a continuation trade or they get in because it's breaking over a resistance level. So I get in. These are probably up like 25%. I would sell most of my contracts. Secure profit, guys. Secure profit. And then you can see it touches the 9 EMA right here. And then it goes back up. And then big bearish candle right here. And then I'll look at this. Breaks below. So it's not respecting the 9 EMA. But then the next candle is green. I probably wouldn't have sold this. It wouldn't have been down enough for me to sell. All right. So usually after a big bearish pattern, after a breakout, like it's literally just a fake out. It's literally just trying to, it's literally the quants trying to feed off of the panic seller retail traders, guys. You do not want to fall under the stereotype of being a panic seller retail trader. So this is why you need to have the 9 EMA under your belt. Okay, so it'll save you to not be under these stupid traders that are unprofitable. If you're panic selling, you're unprofitable. I'm sorry, that's just facts. If you're putting stop losses on 0 day till expiration options, like you're not profitable. That's the facts. All right. So look, these contracts probably got cooked, and then boom, they're fucking back up. Okay. So it looks like look, so many times, it might look like it's gonna close below. Like look, and then it's below the 9 EMA, and then it goes right back up. It doesn't close. It doesn't close. It doesn't close. Look at this. Boom. A bunch of panic sellers got cooked, and then it's respecting the 9 EMA. Respecting the 9. These contracts are probably up 50% if we got it at market open. Okay, so this is why you got to use the 9 EMA. And then, okay, look, it closes below. Okay, not bad, but the next candle is green. So we're holding, okay? And then, all right, we're respecting 9 EMA, respecting 9 EMA. And then red candle closes below, and then it's going to go. I would probably be out like right here, guys. Right here. Okay? I don't care if this next candle would go to the fucking moon. Okay? But I've just seen in my time in trading that if one closes below and then the next one is like going down like 4 or 5 ticks, like you gotta sell, guys. I'm sorry. It's the facts. Okay? You want to cut your losses short. You want to take profit. Okay, you want to scale out. Whenever your contracts are up 30%, you want to sell like 60% or half of your contracts and then sell another half at 50. So then now it's like your contracts are mostly just profit. You know, it's really simple. You see profit, you take profit, and you don't want to be taking like huge ass freaking losses. Okay, so if this closes below the 9 EMA and then the next one's bearish, you're going to get out, okay? Because most likely, 80% of the time, it's just going to keep on going down. All right, we can look like right here. Like a lot of people, sometimes when it breaks above the 9 EMA, they'll get in. And then if it gives below, their stop loss is there. I don't trade like that. But look, So blah blah blah, it goes up and then respects the 90 EMA because it doesn't close. It goes down. You see this wick? It goes down, but it does not close. So it keeps going up. It doesn't close below. It keeps respecting the 90 EMA. So now we're in an uptrend. When the candles, okay, so the candles are either going to be above the 9 EMA, and when it's above the 9 EMA, then that means that the market is in an uptrend. Okay, if it's below the 90 EMA, most likely it's going to go in a downtrend. Okay, so we're in an uptrend. We're an uptrend, 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 uptrend. And then you'll see like there's going to be some fat candles. All right, so now we're in a downtrend. All right, now we're in an uptrend. Okay, it's pretty simple. All right, one more example, guys. I know you're getting bored with me, but one more example. Let's go ahead and look at. Okay, so we'll look at on the bearish perspective. So if I was buying puts this day, like, oh, there's some horrible sentimental analysis for the stock open. Okay, the hype is gone. This is literally like the other day, the hype was gone. So we look at here, huge down candle, probably would have got in. All right, look. So then it's bearish momentum, selling most. Contracts up 50%, 80%, 100%. I'm like scaled out like hell. And then we're here. All right, let's keep going down. It's respecting it, Respecting the 90 EMA, respecting the 90 EMA, respecting the 90 EMA, respecting the 90 EMA. Look at this. It closes above, and I probably would have been out here, guys. Like, even if the stock goes down, even after two candles closed above, like, I wouldn't even care, guys, because most of the time it's if it breaks above the 90 EMA and it's two candles like this, it's just going to keep going. Okay, this is such a rare occurrence where it keeps going and then it's like a rug pull. All right, so this is how I trade. If you stick with these principles of using the 90 EMA, then you're going to be able to cut your losses short and you're going to be able to scale out correctly, guys. And that's how you become a profitable trader. Okay, you don't want to be taking big losses like 100%, 50% losses on your account because that will like cook you. Like you're never going to grow an account if you are taking 50, 100% losses on these contracts. So sometimes I'll hold my contracts like forever, but I'm like that means that I only have like 5% of my portfolio allocated into that trade. Okay, so literally I don't care. It could go down to 1 cent a contract and bounce right back up, and like I'll keep holding. Okay, so yeah, that's how I use the 90 EMA. You guys want to do another example, chat? Let's do one more example. All right. So let's like look at okay. I probably wouldn't get in this trade because usually I trade breakouts, guys. It's breaking out of resistance level, and that's what I'm getting in. So okay, here we go. Great example. So we probably would have gotten in here, and we'd sold most 30% here. Good. All right. We secured profit. Red candle. Red candle. Look at this. Two red candles. I'm out. Okay, closes below. Closes below. I don't care if it goes back up. I'm out, guys. We already scaled out and took profit, and then like we probably sold 75% of our contracts, and then we have 25% left of our contracts, and like it's nothing compared to the profit that we've already taken, guys. So you want to scale out, and then when it closes below the 90 EMA, you want to sell. Okay? And then this is a really good strategy, and this is how you actually grow your portfolio if you're a breakout trader. Okay? So this is how I've been able to grow my portfolio is using this. And I've delved into like continuation moves like this, but you see it closes below. All right, I'm out. You know, it's pretty easy. All right, guys. Well, that was the video. Let's go ahead and look at some reviews and testimonials in my Discord. So we're gonna go ahead and go over to my Discord. And let's go ahead and check out some reviews. All right. Oh, look at all these people banking, guys. Look. Julian, very fun to be here. Chopper making some big money. Frez making hella money. And just a lot of great reviews, guys. And then you can join my premium or the free is just fine. If you're okay with having a delay to my alerts, it's okay. I tell you exactly when I enter and when I sell. All right, guys. Peace, peace, peace.